Welcome to Tesla Daily. Here's the latest on Tesla. First up, production of the Cybercab has kicked off, but there's still some skepticism about its autonomy. Meanwhile, Tesla's full self-driving has surpassed a whopping 8 billion miles, yet safety concerns are still hanging around. In California, Tesla dodged a sales suspension by tweaking its marketing language. On a brighter note, they're topping the J.D. Power EV satisfaction rankings. At Giga New York, they've met their job targets, even with some criticism in the air. And finally, Tesla has just won FCC approval for a new wireless charging system. That's the latest on Tesla. Stay tuned for more updates. Let's dive into some exciting news about Tesla. First up, Tesla has kicked off production of its Cybercab at Giga, Texas. This has sparked quite a buzz among fans and investors. Elon Musk is promising to deliver the Cybercab for $30,000 by the end of 2026. But this raises some eyebrows, especially when it comes to Tesla's autonomous driving capabilities. There's a lot of skepticism out there. Critics point to Tesla's history of missed deadlines, particularly with their full self-driving technology. Right now, the Cybercab is a big deal for Tesla. They're aiming to change urban transportation with a low-cost, fully autonomous vehicle. But can they really pull it off? Many are concerned because Tesla still relies on human drivers for its robotaxi service.
Plus, they haven't secured all the necessary regulatory approvals for full autonomy yet.
So, the first Cybercab units will likely be limited to specific areas. This makes Musk's ambitious claims even more complicated. Financially, the success of the Cybercab is crucial. Tesla is facing more competition from established car makers and new players in the EV market. Their market cap is impressive, but it hinges on how people perceive their tech leadership in autonomy. If they can't deliver, investors might get restless. And let's not forget the ongoing legal scrutiny regarding their FSD marketing practices. This could affect consumer trust and regulatory relationships, potentially slowing down the rollout of the Cybercab and other initiatives. So, while the Cybercab production is a step forward, Tesla has a lot to tackle regarding skepticism and regulations to make it a success.
Next, let's talk about Tesla's full self-driving software.
It's just surpassed 8 billion miles of driving. That's a huge milestone, but here's the catch. The safety data that came out with this announcement shows some concerning trends. The FSD vehicles are getting into accidents at a rate that raises some serious questions about the technology's readiness for widespread use. To put it in perspective, FSD users experience one major accident every 5.3 million miles, compared to the national average of one accident every 660,000 miles. Tesla has faced legal scrutiny over its FSD marketing claims before, and these new safety stats could complicate things even more. Investors are keeping a close eye on this, because any negative perception about safety could impact stock prices and consumer trust. With competition heating up from companies like Waymo, which has logged millions of fully autonomous miles, Tesla really needs to prove that its FSD can operate safely without human oversight. The future of Tesla's FSD and its market position depends on how well they address these safety concerns. While hitting that 8 billion mile mark is impressive, Tesla needs to prioritize safety and transparency to keep investor and consumer confidence high. Moving on, Tesla has avoided a 30-day sales suspension in California by adjusting its marketing language around its Autopilot feature. This change comes after some regulatory scrutiny and legal challenges about the accuracy of their claims.
By modifying their marketing, Tesla is trying to comply with California's regulations and avoid further legal issues.
Previously, a judge ruled that their marketing was misleading. Now, by stepping back from the term Autopilot and clarifying what their driver assistance features can do, they're hoping to rebuild trust. This is especially important as California is a key market for electric vehicles. The implications of this regulatory interaction could extend beyond California, with other states possibly following suit. Investors should note that while this adjustment may ease immediate risks, it raises questions about the long-term viability of Tesla's autonomy claims. As competition grows, Maintaining a good relationship with regulators will be crucial for Tesla's growth and reputation.
Tesla's ability to adapt its marketing strategies is a good sign, but they need to stay focused on safety and transparency to keep succeeding.
Next up, Tesla has topped J.D. Power's 2026 EV owner satisfaction rankings, with the Model 3 and Model Y taking the lead. This really shows Tesla's strong brand loyalty and customer satisfaction, even as the overall EV market faces some challenges. The Model 3 scored 804 points, while the Model Y followed closely with 797, beating out competitors like BMW and Ford. This level of satisfaction is significant, especially as the EV market deals with fluctuations in sales. The study suggests that most current EV owners are likely to consider buying another electric vehicle, which is great news for Tesla. However, the decline in overall EV market share due to the end of federal tax credits is a challenge for everyone, including Tesla.
While customer satisfaction is high, Tesla needs to navigate the changing landscape of incentives and competition to maintain its position.
The growing satisfaction among Tesla owners could lead to repeat purchases and brand loyalty, key for long-term growth.
Tesla's strong performance in the J.D. Power rankings reinforces its leadership in customer satisfaction,
but they need to stay proactive to tackle market challenges. Now, let's talk about Tesla's Gigafactory in Buffalo. They've met the job creation targets set in their lease agreement with the state. This is a big win, especially after a year of scrutiny from lawmakers concerned about Tesla's commitment to job creation. With over 2,400 full-time workers, they've surpassed the required target of 3,460 jobs. This success is important for Tesla as they navigate a tricky regulatory environment in New York. The factory has faced criticism over its production capabilities, so this achievement is a positive development. Investors should remember that while this milestone may ease some immediate concerns, Tesla needs to keep showing its commitment to job creation and operational efficiency. The factory is crucial for producing energy products and supporting FSD development, making it a key part of Tesla's broader strategy. Meeting job targets at Giga New York is a good sign for Tesla's future, but they'll need to stay focused on performance and compliance to keep things on track. The new technology uses ultra-wideband radio signals for precise vehicle positioning over charging pads, making the user experience smoother. This innovation fits into Tesla's vision of a fully autonomous vehicle ecosystem, where charging is seamless. The FCC's approval shows Tesla's commitment to pushing the boundaries of EV technology, which could give them an edge in the fast-evolving market. Investors should keep in mind that while this advancement is promising, the success of the wireless charging system will depend on how well consumers adopt it and how the Cybercab performs. So, while the FCC's approval is a positive step, Tesla needs to ensure successful deployment and consumer acceptance to make the most of this technological breakthrough. That's a wrap for today's Tesla Daily Insights. Thanks for tuning in.
Just a reminder, this is for informational purposes only, not financial advice. Catch you in the next update.